Welcome to the Paragon Financial Partners Podcast, where we discuss the markets, our strategies, and how to live better today while planning for tomorrow. Hello, and welcome to the Paragon Podcast. I'm Elean Mendoza, and I'm here with Evan Shorten, the firm's founder and principal.
Hello, this is Evan. I hope you're all doing well and trying your best to stay healthy and keep sane during these volatile times. I also wanted to mention that if you're on our email list, please check your email, as I did reach out to everyone with some of my beginning of the week thoughts yesterday. If you're not subscribed to our email list, I encourage you to visit our homepage at paragonfinancialpartners.com and subscribe. Additionally, you can also subscribe to our podcast on the Apple Podcast app and Stitcher Radio.
Okay, so hopefully everyone did receive the email communication yesterday, but we also wanted to sit down and have a longer, more in-depth conversation about some of the current events going on. So with that said, the coronavirus has received most of the attention in the last few weeks, but in reality, there are a few different things coming together, which came together yesterday and exacerbated the amount of selling that we saw. So first, earnings growth has slowed and has become dislocated from the stock market's performance in 2019. Second is the coronavirus itself. However, investors are not too worried about the lethality of the virus, but rather the potential slowdown in global production. And third, the newest oil shock in the energy markets.
Okay, so let's focus a bit on the dislocation of earnings growth and the performance of stocks in 2019. Earnings in 2019 were on the decline relative to past years and ultimately came in flat. Despite the lack of earnings growth, equity markets such as the S&P 500 still managed about a 30% overall gain on the year, ultimately telling investors that the price of stocks was becoming detached from overall fundamentals. Now, in 2020, this dislocation of earnings growth and stock prices are front and center, as many companies have come out and canceled their forward guidance for the year based on, recent events. There's also no getting around the fears surrounding these events, such as coronavirus. As Elean mentioned, the fear isn't focused on the lethality of the virus, as it doesn't seem to be any more lethal than prior health scares, but the severity of symptoms has put a halt to economic production in areas like China, Italy, and South Korea. Now that slowdown or halted economic production seems like a very real possibility for the U.S. as well. We have already seen several states declare states of emergency, the Amtrak suspending direct routes from D.C. to New York, and even the Port of Los Angeles has experienced a significant decline in commercial activity. The fear or economic slowdown that could lead to a potential recession is upon us. Further, in oil news, Russia has rejected OPEC's proposal to cut oil production this past weekend, which hit the markets with a sudden unexpected shock. And one thing the markets hate is lots of unexpected news. The oil sector has been in a long-term bear market for some time now, with low oil prices compressing profit margins and high debt loads. The prospect of both Russia and Saudi Arabia increasing their drilling capacity during a period with large oil surpluses threatens to push oil prices even lower for an extended period of time, ultimately threatening the financial stability of the overall energy sector. It's a lot to digest, but anytime you get too much bad news at once, markets are going to panic, and panic they did, with oil being down 30% yesterday and up over 10% today.
Actually, I think there's one other thing, too, that may have scared markets a bit, and that's the lack of proper policy responses from the administration. So far, the administration has only focused on discussing rate cuts and other fiscal policy measures. That's great and all, but lower rates don't cure the coronavirus. The lack of policy focus on health of the nation is shining light on how ill-prepared we may be to deal with the coronavirus. In other words, printing more money doesn't stop people from getting sick.
Correct. Focusing on the economy will not stop the spread of the virus. But to the government's credit, they did put limits on border control early on, and there needs to be a lot more push forward. Testing kits should be available widely, and everyone should limit public exposure. More universities probably need to be shut down. Public schools should be limited. And this isn't a panic mindset of mine, but one of caution. In fact, the CDC came out yesterday saying that people over the age of 60 should stock up on food and medication and avoid venturing out. Again, this is not a panic mindset, just a conservative and cautious one. So we hope you enjoyed this episode of Paragon Podcast and we're able to provide you with a little more information to consider. I know big down days are scary and can be pretty nerve-wracking, but ultimately, this is why it's important to have a plan in place for when big volatile events occur. If you don't have a plan in place, we highly encourage you to find the resources and professionals to help you create one. As always, please feel free to reach out to us, and thank you for listening.
Yes, thank you everyone for listening to the podcast, and again, please don't forget to subscribe and stay up to date. Paragon Financial Partners, Inc. is a registered SEC investment advisor. The broadcast is for informational purposes only and should not be considered as a solicitation or offer to purchase or sell securities. The financial strategies and guidelines discussed herein may not be appropriate for everyone, as each individual circumstance is unique. Please review all tax information with your tax professional. Please review all legal information with your legal professional. We hope you enjoyed the Paragon Financial Partners podcast. And again, thank you for listening.